The SEC has called Ethereum a commodity, which is key in keeping it off the regulatory agency's radar as an unregistered security. But with the Ethereum Merge, does it change the nature of what Ether is from a commodity to security? Joining us now is Jeremy Sheridan. He's the Vice President of Regulatory Affairs at crypto custodian Prime Trust. Hello there, Jeremy. Thanks for joining us. So, as Ethereum goes from proof of work to proof of stake, it could arguably make it more centralized, and staking could arguably be akin to owning some more shares. Does it change the nature of what Ethereum is from a commodity to a security? Would that be on the radar of the SEC?
Good morning, Christine Lawrence. Thanks for having me. The challenge with a lot of these questions is it depends. There's a lot of interpretation surrounding them. There's certainly consideration that it could move to a security. If you look at the proof of stake system requiring an investment of money, first prong of the Howey test in terms of staking, you look at the common enterprise through the Ethereum Foundation, you look at an expectation of profits through staking rewards, and you look at those profits coming from the efforts of other Ethereum participants, that certainly would meet the four prongs of the Howey test. And certainly some consequences to follow from that. That would result in an entirely new business model, certainly more complex transactions. You'd have to separate brokerage, clearinghouse, exchange functions into different lines of business, and a much heavier involvement for obvious reasons from the SEC. But on the other side, there are certainly arguments to make that it is not going to fall into the securities category. There is no third-party entity involved because it would be truly decentralized, and there's no common enterprise because there's no validation pools at the protocol level. So it will really rely on interpretation, much as we've been faced with throughout the industry and a lot of other considerations.
We look at it from the perspective of whether or not it's a security or a commodity, but there's also the aspects regarding mining. I think this is something that a few people have brought up on our show over the past few days, is that we might see a change in regulation as it pertains to mining, because if the merge is successful, which it looks like it will be, it might bring up the idea that cryptocurrencies can exist without using as much energy as they currently do. Do you think that we will see some sort of legislation or regulatory ruling from, I don't know, let's say not the EPA at this point, but we might see some sort of regulatory, some regulations when it comes to energy usage if this merge is successful?
Absolutely. I think we'll see those regulations and legislative actions, even if it's not successful, and maybe even more so if it's not successful. I think, to your point, this merge and this event is really going to accelerate the conversation surrounding some very, not to sound dramatic, existential questions within the industry related to, as you brought up, Lawrence, regulation. Will this result in more or less regulatory touch points? Be greater regulatory capture, more mandates, more censorship? And I think very important to answer that question from not only industry, but also market participants. On what does the industry want? What do market participants want? There's an underlying tension surrounding, and maybe an overt tension surrounding regulation about its positive or negative effects, and whether or not this industry can coexist with regulatory structures. Will this result in further anonymization, greater, obfuscation techniques, or conversely greater adoption? And beyond regulation, I think very closely related is the decentralization conversation. That point is certainly paramount within this, as you mentioned, has been brought up by several guests. Will the merge create greater centralization? Will the limited number of validators make it a more centralized entity, or will the entry into the market, as opposed to proof of work mining operations that require such robust infrastructure to really enter, will this on the other side allow people to join? The current entry is 32 ETH. Does that allow for a greater number and therefore less decentralization? So these are, again, I think very foundational questions for the industry, for the market, that will be greatly facilitated by the merge.
All right. And I just want to offer a quick correction. So the SEC hasn't called ETH a commodity, but rather William Hinman, who was formerly of the SEC, did, but the agency formally agreed to that. I'm going to wrap, but before we do, just want to quickly ask you about, crypto lender Celsius. I understand that they have litigation out against Prime Trust over $17 million worth of tokens that are held in custody with Prime Trust. Any update on that litigation?
Well, Christine, as you know, I'm limited on what I can comment for pending litigation, but I do think it's important to stress that we have terminated our relationship with Celsius more than a year ago. At Prime Trust, we take our fiduciary responsibility very seriously. We only accept business partners that meet the same high standards. Our North Star is to safeguard the assets of our users, our clients, our integrators, our investors, our customers. And we take that regulatory compliance first approach with all our business partners and don't do business with entities that don't have similar mindsets.